Welcome to This Week in Money, the source for market opinions, brought to you by AmericanManganeseInc.com. Here is Phil Mackesy.
Gerald Celente is publisher of the Trends Journal and founder-director of the Trends Research Institute. He is online at trendsresearch.com. He joins us today from historic Kingston, New York. Gerald, it's good to have you back on This Week in Money.
Oh, thanks for having me back, Phil.
Summer Trends Journal is out. The first great war of the 21st century is underway. Mainstream media, of course, either ignoring it or dismissing it outright or focusing on stuff like what Lady Gaga is doing. No wonder we don't get what's going on here. You are one of the few people who are talking about what's actually going on, and it simply gets back down to three basic things: greed, power, and money. Again, still, right?
Yeah, it's history repeating itself over and over and over. And when you talk about the First Great War, people, it's in front of them, but they refuse to add it up. How about that lovely little war in Libya? Mm-hmm. Oh, I thought that one was over. Yeah, not by a long shot. Not only is it not over, it's destabilizing most of Western Africa. Just take a look what's going on in Mali. That was all under control, and Gaddafi was in control. How about that lovely little war in Syria? You know, where metropolitan areas are being destroyed. And it's not a civil war. It's a war instigated by the United States, NATO, and I love it, those peace and freedom-loving democratic Arab League countries.
Oh, yeah.
You know, that wonderful kingdom over there in Saudi Arabia where the women can't drive cars. You know, they do beheadings in public. That wonderful democracy. And Qatar, the other one. But you can't say anything bad about kings or emirs. They're different than autocrats and dictators.
They're our friends.
They're our friends. And then, of course, the bloodbath in Bahrain that nobody wants to talk about. Oh, how come a Sunni minority is taking over and ruling a Shia majority? That's okay? Well, it's okay when you have the Fifth Fleet Station there. And he's an emir, too. And even though they're criticizing Bahrain for the inordinate amount of tear gas that they're using against the people, don't say anything bad about them because they're our friends. So then you keep going around the world, and what do you have? Millions of people taking to the streets. In Spain, the indignados. You have a breakdown in Greece society. It's in front of everyone. Oh, that's nothing. How about all those immigrants that they're now throwing out that flooded in from Iraq, from Afghanistan, from Africa, that now have nowhere to go? And the same thing happening all over. How about that another quarter of negative economic growth in Italy? Well, you know those Italians, they don't want to work. Oh, yeah, and how about Spain? They didn't fix that problem. I thought they did. Well, they're coming up with a solution. You just wait. It's one after another. Yeah. It's collapsing in front of our eyes, even to riots in Anaheim. But people don't want to put it together.
Mm-hmm. Back in the spring, you said, get ready for climax time. And here we got some news out of France and Britain, central banks of both countries, making grim forecasts this week. But boy, if anybody is around to put a happy face on, it is Mervyn King, Bank of England governor, who says, unlike the Olympians who've thrilled us over the past fortnight, our economy has not yet reached full fitness, but it's slowly healing.
Who could get away with a two-bit line like that?
Nobody.
Nobody. And that's all this is, Phil. I want to make this really 100% clear to everybody. You have a bunch of two-bit freaks throwing out their two-bit lines and people swallowing them. Mm-hmm. And you know why they swallow them? Because Mervyn never talks without a whole squad of hackers around them, flunkies and serfs, and cameras flashing. And Cameron never shows up without the red carpet rolled out. Neither does Obama, Merkel, or any of the rest of them. It's all a show. It's a freak show. And they call it politics. They call them parliaments. They call them senates. It's nothing more than a three-ring circus.
Gerald Celente from Trends Research Journal, here our guest on This Week in Money. And we've got more bad news out of the Europe. Standard Chartered, the latest in a series of scandals involving British banks. New York's Department of Financial Services blew the whistle on this one, says the bank hid more than $250 billion in transactions between Iran and outside counterparties. And here's Mervyn King again. He's saying we shouldn't have a rush to judgment on this.
Well, yeah. How about HSBC for their money laundering a couple of weeks ago with drug money? And how about the LIBOR scandal? that should be the biggest story of the century. Everybody's interest rates are affected by it, regardless of where you live and what you have a loan on, whether it's your automobile, student loans, as they have in the United States, mortgages, everything that you pay for, credit cards. It's all a rigged game. And so, of course, they're not going to say anything when their buddies in the banks get in trouble, because have you seen a head roll? Not when the LIBOR scandal came down. Oh, what did Robert Diamond walk away with, the head of Barclays? $100 million plus. And, oh, I'm sorry. And they get away with it.
We are talking to Gerald Celente here on This Week in Money. Let's talk about the U.S. campaign. Always good fun here. President Obama and Mitt Romney fighting about welfare and women's rights. Romney in Iowa says it's tough to be middle class in America today, visiting a cornfield.
Well, they say that politics is show business for ugly people.
Yeah.
And that's all this is. It's the presidential reality show. Oh, and by the way, I want to go back to the other banking scandal for just 1 second about Iran, washing money for Iran. Iran, of course, is the big boogeyman right now. Got to stop those Iranians. They can't have any nuclear weapons. Oh, and Syria, they can't have any chemical weapons. They said, do you know what the Syrians said? They said they're going to use chemical weapons if a foreign country invades them. How dare they? How dare they use any weapons at all? They should just lie down and let a foreign nation take them over. I always hear the line, Israel has the supreme right to defend itself. Hey, nobody else does?
Yeah, only Israel, sorry.
Only Israel. And you or I don't have the supreme right to defend ourselves.
No.
No other country, no other people, only Israel. And I'm not an anti-Semite. I don't want to hear that kind of crap. I'm just calling them what it is. And so what I'm saying is we have no right in Syria, just like we had no right in Libya, no right in Iraq, no right in Afghanistan, and no right for any country to tell another country what to do. Now moving back onto the presidential reality show, and you're with Romney over there, who's also saying, if you want to see somebody really ignorant, saying that the Israelis are culturally superior to the Palestinians, and by definition, the rest of the Arabs, that's why they're so financially sound. And I'm not making this up; he said it, and why they're doing better than the rest of the Arab world. So I mean, when you hear statements like that, you can see where this thing is going. So now you have Romney and Obama, and all they are doing is taking cheap shots at each other. And you mentioned here he is in Iowa, in front of Jack's barbecue place, or sitting on a bale of hay, and Obama rolls into Pittsburgh, and he's in front of a stack of cement bags and a forklift, and what it is when you listen, Phil, to their economic policies. If you were taking Economics 101 and the teacher asked you to come up with a program to make the economy whole, and you came out with the 2-bit lines that these freaks were throwing out there, these bad actors, you'd flunk out and you'd be thrown out. But hey, on the presidential reality show, the only thing that counts is performance. We got
news here, Gerald, from Reuters Ipsos Reid poll released today, showing Obama's lead about 49% to 42%, Romney. But it's all just a presidential reality show. It's not. None of this is real, is it?
No. Again, nothing is real. It's what you see. I'm not voting. Because if you don't vote, you get what you deserve. If I vote, I get what I deserve. I don't want a banana or a Gambino, a Democrat or a Republican. I will not vote for a lesser of two evils. I don't hang out with lesser of two evils. I don't go out with lesser of two evils. I don't do business with lesser of two evils. What, I'm going to have a lesser of two evils run my life? So to me, it's stay home, don't vote, 40% or less. That's my campaign slogan. If 40% or less of the people turn out to vote, we can call this an invalid election, because it's invalid. These people do not represent the American people. They represent their political religions and their religious political followers. they don't represent the rest of us who don't believe in their political religion.
Things going from bad to worse in Europe, as we mentioned earlier. Central banks of France and Britain making lousy forecasts. Data out of Germany showing weakening in manufacturing. And I got to give a shout out to somebody you mentioned in the letter, Christine Lagarde, IMF managing director, thinking about people in Greece trying to escape taxes. They should help themselves collectively by paying all their tax. Isn't that wonderful for her to say something like that? Because it turns out, Gerald, and thanks for tipping us out off on this, she does not pay any tax herself.
That's right, because they're them diplomats. They are better than you and me. All of these people, they're all better than you and me. All your parliamentarians, your presidents, your directors, your secretaries of this and that, your congressmen, they're all better than you are. They don't have to play by the rules. They make the rules and tell you how to play by them. And as you can see in the Trends Journal, our wonderful, award-winning illustrator, Anthony Frieda, and I mean that, he's won major awards and using Trends Journal illustrations. And he has a beautiful composite of Christine Lagarde looking like Marie Antoinette with the guillotine back in the background.
I love the cover also of this summer's issue of Jesus chasing the money changers out of the temple, except it's a new set of money changers.
Actually, it's the same set of money changers. They just have different names now. They have the names of Wells Fargo, Citi. They have the names of Dexia and Barclays and the Goldman Sachs gang. It's the same thing.
Sure.
It's usury and greed. Nothing has changed. It's in front of everyone's eyes. They are stealing trillions of dollars from us, and no one is paying the price other than the people who they're stealing the money from to pay off the banking criminals who made bad bets. So we went back to saying and showing the illustration of Jesus driving the money changers out. It's all the same.
Sure.
It's the biggest bank robbery in world history going on right now, and the banks are doing the robbing.
We're talking to Gerald Celente here on This Week in Money. And speaking of bank robbers, what do you make of the market mania, hoping that the ECB and the Fed will do something to stave off a recession and make more money for them? What's going on there?
It's hype. It's a con game. That's all this is. Look at the last week with the problems with Knight and their high-frequency trading. Go back to the things you were talking about with the banking scandals and LIBOR. Look at one after another. The whole game is rigged. They're conning people into thinking that these brilliant, I love the names they give themselves, policymakers. We're policymakers. Went to George Washington University. Don't you know who my father is? Policymakers, lawmakers.
Yeah,
I could go on, but I think this is a family show. You know? So what they're doing is they keep blowing themselves up full of hot air, saying how they have everything fixed. Things are going to improve. The paparazzi shoot the cameras off. They wave and bow. The markets go up, and nothing is solved. You cannot solve the problem. There's trillions of dollars worth of debt. Italy, as I mentioned, they're going into their fourth quarter of recession. You already have Spain and Greece in a depression. They never use that word. Isn't it amusing? 25% plus unemployment. The people are raiding supermarkets right now to eat as we speak in Spain, and they don't call it a depression. You have Italy with a, debt to GDP ratio of 120%.
Wow.
You have no, and by the way, Italy is the third largest economy in the Eurozone, dwarfs the little, with the problems that Greece has and Spain, with the amount of debt that's never going to be paid off. And all they do is throw this out there that these brilliant policymakers, the G20, are going to fix things. The markets spike up, the suckers jump into it, and then they pull the plug on it.
Gerald, I guess there is maybe a light at the end of this tunnel, but as you're pointing out, the light is being held by us, the people. It's really up to us to change some of this stuff, right?
After doing this for 32 years, that's all it's come down to with me. It's the individual. And, there's that wonderful Hindu saying, when the student's ready, the teacher appears. And what that means is that anybody that's really practiced at anything, that really practiced and wanted to be great, you find the right teachers, and they find you. And the same thing to me, when the people are ready, the leaders will appear. But right now, to me, the people aren't ready. They're not ready physically. They're not ready emotionally. They're not ready spiritually. They're not ready financially.
Mm-hmm.
They're not ready at a lot of levels. And I say financially in the sense that, when you lose everything, you have no house, you have a lousy job, you're just dying, you're just trying to make ends meet, and you're not making them meet. You don't have a lot of peace of mind going on. And it knocks you off in a lot of ways. And I'm not blowing out hot air. I've been in that position in my life. I was blackballed from the media between 2002 to 2007 for being a trend forecaster and forecasting what would happen with the Afghan war, what would happen with the Iraq war, and calling what was going on a real estate bubble. And in America, it was either you're with us or against or with the terrorists. And I was with neither. I don't believe in my country right or wrong, my father right or wrong, my president right or wrong, myself right or wrong, or anybody right or wrong. Whether it's Jesus, Muhammad, or Buddha, there's no salvation for the hypocrite. So I had very difficult times for a while. I know what it is to struggle. I'm a guy that grew up in the Bronx and Yonkers, no silver spoons passed around in my family. So when people are going through the financial difficulties they're going through now, my only recommendation is cut back on everything that you can.
Yeah.
Don't buy one thing that you don't need. And live to the purest you can. And I mean that not in a religious way, but every piece of food that you put in your mouth, make sure it's quality. Less is more. Don't break the chains. Don't buy anything at the chains. And again, only speaking for myself, because the motto of the Trends Research Institute is think for yourself. With all those people that are really, really having tough times, consider beginning your day with meditation to quiet your mind down. Because the more people that get strong, to me, emotionally, spiritually, and physically, that have the courage, dignity, respect, and integrity to be their own person, that's the only time things are going to change. When the individual changes, to me, everything will change.
Gerald Celente is publisher of the Trends Journal and founder-director of the Trends Research Institute. Hey, the Summer Trends Journal is out. You do not want to miss it. Put your money where your mind is and subscribe. You can find out more at trendsresearch.com. Don't forget, Gerald's on Twitter, Gerald Celente, and the Gerald Celente channel on YouTube, also worth watching. Hey, Gerald, it's always great to talk to you. Thank you, sir.
Hey, thanks so much for having me on, Phil.
This Week in Money is archived online at talkdigitalnetwork.com.
Louis James is Senior Metals Investment Strategist at Casey Research, and he's Senior Editor of the International Speculator and the Casey Investment Alert. He is online at caseyresearch.com. Hey, Louis, it's good to talk to you again.
I'm glad to be back.
We are talking about China. You were just back from China. Let's talk about your trip. Where did you go, and what did you see? What, for you, were the highlights of what you saw?
Well, I crisscrossed really from east to west and north to south, and I looked at a lot of different things. A sort of interesting anecdote from this is that I was actually scheduled to go see Intercitic Minerals' Dacheng project in Qinghai province in western China. But even as I was headed over there, news came out of a takeover offer, and the management pulled the welcome mat, which I don't blame them for. It was actually the right thing to do. They can't have third parties underfoot while they're negotiating with the buyer. But it was just sort of interesting that happened, even while I was over there to go check it out. And in a way gratifying, because it's exactly what we said would happen. My mistake, I guess, is that I thought that such an offer would likely come after they published a Chinese feasibility study, which they're working on. It's part of the permitting and going forward process over there. So they had to do a Chinese feasibility, and that's not the same as what you would do under 43-101, but it's very real, and the Chinese value it, and there are a lot of hungry mining companies over there looking to grow. And this company had already had a takeover offer last fall, so I thought it likely that they would get another takeover bid. And lo and behold, they got one before I could get there.
Now, what else did you see?
A number of things, and I have to say I can't talk about them all until I've talked about them with my subscribers, and I have some more due diligence to do. But one that's also in the headlines that your listeners may be interested to hear about is Silvercorp. I spent some time with them, and was impressed all over again by both the professionalism of the people they have on the ground there and not just the can-do attitude, but the are-doing reality of what they're doing there. They're building their new GC mine, expanding beyond the Ying camp in Henan province. Now they're down in Guangzhou. They got it permitted. They're building it. The plant is framed and the foundations are laid for the ball mills. The thickeners are going in. You can see the progress there. I went underground and I spent a fair amount of time traipsing around looking at the mineralization in different places. I believe the deposit is real. There's just no way you can fake it when the same vein shows up on multiple levels in a mine or in different locations. And this is worth stressing because Silvercorp has its detractors, even though multiple outside audits and examinations have vetted the company and verified that they're on the up and up. Just the fact that they were ever accused of any surreptitious dealings or wrongdoing, that's hard for that odor to clear the air. You can be vindicated, but people always wonder, well, why were you accused in the first place?
Yeah.
So I like to stress that I have been to see their operations now 3 different times, 3 different locations. Jeff Clark's been there too, and we've kicked the tires hard. We've asked hard questions. We've talked to government officials. We've talked to their competitors. We believe that this company's assets are real, and they're paying dividends to shareholders back in Canada. So if the money is actually flowing to the people who own the shares, then I think that's the end of the story.
Louis James from KCResearch.com, our guest here on This Week in Money. Louis, you're just back from China. Give us a sense of the mining industry in China. How's it different from what we're used to here in North America and what you've seen in other countries?
Well, actually, that has vastly changed just in the 6 years since my first visit to China. I remember seeing basically coolies toting dirt out of the ground in buckets or in wheelbarrows. They didn't even bother with donkeys because labor's so cheap there. And most of the mining done in the country was still done on that kind of basis, sort of 1930s technology. Of course, about 10 years ago, they had a policy change. They opened up the doors to foreign investment, and Western companies stepped up to the plate. They invested, they built mines, they explored. And now the Chinese have apparently learned, copied, imitated, improved upon everything they've seen. And they're building their own drills. They have their own haul trucks, ball mills, everything you need. You can get it there, made in China, made cheaper. And they are doing a lot more of their own exploration now. So I've seen an enormous modernization. I've seen much greater capacity domestically than they had before. I've seen technological sophistication improving. And interestingly enough, I've also seen labor rates go up so that they're doing more mechanization and more automation of processes instead of just throwing more people at it. Major changes going on over there. And interestingly enough, none of the Western companies have been expropriated. Nobody's been nationalized after doing any work on the projects that they got in China. So the jurisdiction is actually turned into a very good place for miners to be. The problem with it, though, is that now that the Chinese have their technology transfer, they're not giving out licenses anymore. It's been quite a while since I've heard of any Western companies getting any significant new mining concessions in China. So the bad news is it's a bit late to the party. I'm not sure that there's a lot as an investor for me to look for in terms of new companies going into the Chinese market. But for the ones that are there and that have showed that they can navigate the waters, it looks like a good place to do business. I'd be much more worried about numerous countries in South America or Africa, for example.
So China's a pretty stable place to do business compared to a lot of these other places.
The rules of the game have not changed. It is China, and strange things can happen because it's the central powers have the power to just shut down industry in a whole province just at the wave of a hand. So it's not the same as Nevada. But I will say again that they have not changed the rules of the game on anybody. They have not expropriated any Western companies, and Western companies have been permitted, have built mines, and are continuing to do so.
What's the attitude of the governments, the local governments, to Western companies? Are they friendly?
Well, I think it depends a lot on how the Western company goes about doing things.
Sure.
In general, they are cooperative and interested in doing business with serious people. But face is still important over there, and they get pissed off if Westerners come in with the, we know how to do things right attitude, and you Chinese people watch what we do and step aside while we show you how the grown men do it. There are companies that sometimes they don't hire Chinese people, or even down on the operational level, they'll have separate dining facilities for the Chinese and the Westerners and things like that. That's not a good sign. You need to be able to work with them, and if you can, are, and do, then they will work with you. But ultimately, I have to say, your Chinese connection is a make or break proposition. You've got to have the right person in China or people in China with the right connections who can make sure you don't run into any landmines. And how do you know that? Unfortunately, there really isn't a way to know that in advance. Everybody says that their Chinese partner is the best partner in the world. I've never been able to tell, just looking at their credentials, which ones work and which ones don't. Sometimes you see people with the brother of the governor or some, highly credentialed person, and the project never makes any progress. So the way to choose, I think, is simply to look at the ones who already have manifested the ability to get things done. If they're doing it, then obviously they can.
Louis, as senior metals investment strategist for Casey Research, you saw obviously a lot of mines and a lot of mining operations. What else did you see in China that kind of caught your attention?
Well, I pretty much discussed the modernization of the mining. I think that's quite significant. Yeah. And even with slowing demand and growth from the West for Chinese products, I think their manufacturing sector will continue to grow. So I wouldn't worry about Chinese mining suddenly flooding the world with copper, for example, or all kinds of new minerals. I would look forward to them providing more of their own needs, but I doubt it'll be enough. So overall, I don't really see any big game changers from Chinese mining. But I will say that on a broader level, looking at China as it really is today and the growth that we've seen over the last 10 years, it's unbelievable. I mean, do you know what 10% growth compounded over 10 years does? You've got more than twice as much of everything.
Wow.
Everywhere.
Yeah.
And you can actually see that in China. There's places where I went before it took hours to get somewhere on a bumpy track, and now there's a superhighway there. Mm-hmm. And over here there's a high-speed train line. And there's new buildings everywhere, not just in the big cities. It's one thing to go see the skyscrapers in Shanghai. Yes, that's very impressive. But to me, what's much more impressive is to go to all these little villages where people lived in mud brick thatched huts. And now they've got real bricks, glass windows, and satellite dishes on the roof.
Wow.
Maybe not every house, but a lot of houses and a lot of villages are like that. The country is simply not the same place it was 10 years ago. It was a poor country before, and now it's a rich country with a lot of poor people still in it. I mean, I'm not saying everybody's rich, but this is a place with real significant wealth, enormous productive capacity, and they have invested in the future, and I think that's quite significant on the macro level going forward.
Yeah, as opposed to the Western model of borrowing to build infrastructure. This is all paid for with cash.
And spending the money on TVs and lazy boy chairs.
Yeah. Louis James is Senior Metals Investment Strategist at Casey Research. He's Senior Editor of the International Speculator and the Casey Investment Alert. He's online at CaseyResearch.com. Don't forget, Navigating the Politicized Economy. It's presented by the folks at Casey Research and Sprott Global. That's in Carlsbad, California, September 7th to 9th. You can get more info at the Casey website. Hey, Louis, always a pleasure. Good to talk to you. Thank you for this, sir.
Sure thing. Thank you very much.
This Week in Money is archived online at talkdigitalnetwork.com.
Danielle Park is president and portfolio manager of Venable Park Investment Counsel. She wrote the best-selling book, Juggling Dynamite, and you can find her blog at jugglingdynamite.com. Don't forget, Danielle is at the Toronto Resource Investment Conference, September 27 and 28. You can register now at cambridgehouse.com. Danielle, it's always good to have you back on This Week in Money.
Hey, my pleasure, Phil.
Happy 5th anniversary to the global credit crisis. It was 5 years ago today. The ECB pumped $95 billion into the financial market, and we first learned the word subprime.
Hey, that sounded like quite a bit of money back then.
Yeah.
It's amazing how we've become so accustomed to the T word now that no one considers a few $billion worth anything anymore, right?
Mm-hmm. And we have news today from ECB Governing Council member Christian Noye. He says, get this, the ECB is going to intervene in the bond markets because they did such a great job in the other markets.
Oh, well, I mean, there's not really a market in the world today that hasn't been intervened with repeatedly.
Yeah.
The problem we're having is finding any kind of organic price information in what's going on with the interventions. You know, there's wave after wave, and the classic scenario right now, Phil, is you have the economic data around the world weakening at quite a pace, and this is truly a global slowdown, right from China all the way around the world. And you're seeing still the equity markets and the commodity markets trade up in the last couple of weeks on this whole idea that the next wave of stimulus will be imminent, whether it's from China because they're facing a hard landing and they think that the People's Republic will come up with another wave of stimulus there, or whether it's in the ECB, or whether it's Jackson Hole, you know, August 31st, the next wave of announcements potential from the Bernanke company. So you have this amazing disconnect in the world right now where asset prices are extremely low volume trading going on, and yet the price action is to the upside, just as all the data continues to disappoint to the downside.
Sure, it's summer. I mean, trading volume is light. Even apparently Jamie Dimon is at the beach today.
Yeah. Well, it's true that volume has been light in the equity buying markets for the last several years. It has never really recovered the way it was at the peak of the last cycle. But even by those standards, the last couple of months have been, just pathetic. And the machines are kind of going wonky again. The algorithms are doing all sorts of crazy stuff. So it's a very unstable environment, and yet everything, sort of, shall we say, bricks and mortar, everything that we can actually count or measure in any kind of an objective sense is warning us that the downturn continues to spread and mount. And of course the analyst community is hopeless at getting this turn, and they're now vigorously downgrading their expectations on the earnings side at the fastest pace since 2009. But really, the transportation sector, the transportation index has not participated in the rally in the overall markets the last several weeks. You have the Baltic Dry Index plummeting. You have the global ISMs, the manufacturing data, contracting in most major economies in the world. Even the earnings data out of the big international companies for Q2, there's been some of them that have been able to beat on the earnings expectations, although they've lowered that number several times coming into this quarter. But the revenue side, and this is what you and I have talked about a few times, Phil, the revenue side is just not bouncing back. And so what you're seeing is productivity ratios in most of the world's large companies are under pressure because they're going to have to lay off more workers to try and maintain those margins, to try and keep earnings growth, in a constantly uptrend. What they do is they sort of hack away at all their expenses repeatedly to try and keep those margins. But as the top line falters, and I think that's the theme that we're seeing everywhere. It's not just the demographic theme, although that is a huge part of it, where, the boomers are now 55 and older, and they are all realizing they have a lot less money than they thought they were going to have at this phase. So they're ratcheting down their expectations of what their lifestyle should look like and what sort of, spending they should be doing going forward. So you have that demographic pressure all over the world to contain spending. You also have this big hit to the net worth statistics, which we've mentioned, where the boomers and have 40% less, quote, net worth today than they thought they had several years ago. But you've also got just the deleveraging cycle. So looking at the data, I noticed this week, for example, in the U.S., the debt to GDP data, which was, north of 134% at the peak in 2007, is now at 114% debt to disposable income, Phil. So that's a positive thing. It's going in the right direction in the sense of people are starting to spend less and save more and build up some net worth again. So that's all very positive, but you see that will continually appear in the falling retail sales data. That's in China, and that's in America and Canada, everywhere. Consumers are just not spending what they were because they aren't using the credit the way they were.
We're talking to Danielle Park here on This Week in Money. We got some trade deficit news. U.S. trade deficit falling to its lowest level in 18 months in June. At the same time, Canada's trade deficit widening to the most in 21 months in June, and that's mostly because of the big drop-off in commodity prices here.
Right. However, commodities are starting to firm up again. Most specifically, you see that in the food area, Phil, with the drought that has been prevalent this summer all over. You see that food inflation is picking up dramatically as we head into the fall. So although there's a bit of a lag time between when food prices, escalate because of this summer's drought, it's going to be in the next several months, and that's really hitting at a time when consumers are not very flush, and the data on the employment side is very weak, and we're facing the next wave of layoffs, as I said, with the revenue declines that are coming in the world. So I think really what this does is I think it's really backing the QE camp, the let's stimulate more camp into a very difficult position, because you have a desperate need for some kind of, they want so much to support the economy and get some kind of recovery going again, but they're really at a rock and a hard place. Rates already at zero, balance sheets already degraded all over in the world central banks, cash already piled to the roof inside institutions, and still this falling velocity and growth and demand all over the world. So I think they're at a really tough spot. You look at China, what type of stimulus are they going to pump in when they've already got this problem in food prices? They can't just throw money at the commodities markets and, break the back of the very feeble consumer that's still there in the eyes of trying to stimulate. Stimulate what? Even China's retail sales growth is at a 5-year low. There's steel construction, equipment manufacturing, all that data, electricity consumption, everything is plummeting. If you actually do the math on that, it looks more like China's growing at something like a 5% GDP growth rate, which is considerably less than the 7+ that's being reported, and a hell of a lot less than the double digit they had, 5 years ago.
We're talking to Danielle Park here on This Week in Money. You mentioned food prices. Just looking at this latest UN report, food prices jumping 6% last month. Global corn prices, the culprit here, jumping nearly 23% last month after the worst drought in over half a century in the U.S. Going to have a big impact, right?
Going to have a big impact. Going to mean a lot of cows are put down because they can't afford to feed them. So it'll create, that's actually a good thing, because the less animals we eat, probably better for our overall health as we move along here, but it's still going to be a friction in the system in terms of what people can afford, less eating out, because restaurants will have to somehow absorb the cost and increase prices in whatever way they can. So, it's just one of those headwinds which will continue to mount over the next few months as the economy is already weakening. And I think September, as I mentioned, is going to be quite a interesting month as we head in there. People are desperate for income. Interest rates are still so low. Dividends is a big theme. Everybody's wanting dividends. You've got 402 of the S&P 500 companies in the U.S., for example, right now paying dividends, Phil.
Wow.
70% of them increased them this year. So those are actually positive trends, as I say, because, no longer are people trying to gamble on capital gain growth alone. Now they're looking for income, to be paid as they wait, for example, as investors. That's all great. My concern continues to be that prices are too high. So although I'd love to be scooping things up for income at the moment, I believe that we're going to find over the next several months some shocks to the downside, and that it could be quite profound. And if that's the case, we could see even the dividend-paying things lose a significant amount of value. So it's much better to be patient and be safe as possible and to wait to pick that stuff up. There was an interesting article in the Globe and Mail this week, or last week I think it was, just looking at the last 5 years, Phil, in terms of investment asset classes and what things have been rewarding for people to hold. And the answer is cash, treasury bills, and a bit of food commodities. Basically, that's it. Everything else has been very disappointing to negative returns throughout that period has harmed your portfolio, let's put it that way, with all this incredible volatility, and people have not been able to get any benefit out of that. So I think it really speaks volumes to this fact of if you're desperate to buy something and you're impatient and want to get rid of your cash as fast as you can, well, there's a price to be paid for that in this environment.
Hey, and if you're desperate, here's a good one for you. British soccer team Manchester United starts trading on the NYSE this week under the symbol Man U. What the hell do these guys make?
Well, I'm sure that the soccer players, Manchester themselves, are looking for some cash up front, which is a great idea for them. But again, as an investment, it strikes me as a horrendous idea. There's certain sectors that are just so extremely, let's say, cyclical and low profitability that it doesn't make sense to try and expose your capital to that sort of risk for what return, Anyway, look at the Facebook saga. It continues to fall in value, and you just have a lot of IPOs that were scheduled to be brought out in the last little while were canceled because Facebook did the face plant so bad and really put people off. But I think, as let's put it this way, every time people sort of lurch from one great hope to the next in terms of, we'll just buy this and it's a sure thing, and they realize that in this environment there's really very few sure things, and goes back to, waiting for prices to be realistic and waiting for a time when markets are not bouncing off of every central bank comment, but actually looking at fundamentals again.
Danielle Park with us on This Week in Money over at the blog at jugglingdynamite.com. A great video, and nobody is wearing a bow tie. Maybe that's why it's called What a Wonderful World.
Yeah, well, I guess when you live in the real world, Phil, when you have to be an adult and deal with reality, you can sometimes seem kind of negative. Yeah. And I just love that clip because it assures us that messed up humans are not the only thing on planet Earth, and there is a wonderful natural world and order going on, and we are actually part of that. So I thought it was a encouraging little clip. Yeah,
well, lovely clip from YouTube, and do drop over to the blog and have a look at it. Another one with Komal Shri Kumar. He's Chief Global Strategist at TCW Group, and he's talking about a number of things in this clip.
Hey, good for you for pronouncing his name so well, Phil. That's excellent. I agree with his comments, and I've followed him for a little while. I think he's one of the few that's sort of rational in the way that they look at the overall trends that are at work today. And I agree that, we could be setting up for another valuable opportunity on the investment front in the next several months, but I do think it's at lower prices, as does he, and it's a question of getting away from the mentality of the bailout and getting back to the mentality of how do we build sustainable growth companies, revenue streams, and that sort of focus will be beneficial in the future.
Danielle Park is president and portfolio manager of Venable Park Investment Counsel. She wrote Juggling Dynamite, and insider's wisdom on money management, markets, and wealth at last. You can find her blog at jugglingdynamite.com. Hey, listen, it's good to talk to you. Thank you, Danielle.
Thank you, Phil.
Thanks to our guests, Gerald Celente, Louis James, and Danielle Park. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with another edition of This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.